Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss what is the outlook on gold, what is the outlook on silver, and where is rupee heading. In last couple of months, gold corrected from 5600 to 4100. That is a correction of close to 27%. Now, whether it is a buy on dips or it can fall further. In today's presentation, let us understand that. Before making the view, let us understand why gold prices have fallen by 27%. So there are two important reasons for the same. First, in order to fund the Ukraine war, Russia have sold close to 15 tons of gold in last couple of months. Second, in order to manage its currency from depreciating, Turkey has also sold its gold close to 7 to 8 tons. Turkey has done exactly the same thing what we have done in 1991 when there was a currency crisis. So even few countries have sold gold, but there are few countries which are still buying gold. For example, China is a net purchaser for last 16 months. Czech Republic country is buying gold from last 36 months, and many other countries are on a buying note. So we can take a conclusion from the above chart that the weak countries are selling gold in order to fund their domestic requirement, while stronger economies are buying gold on all levels. Now, whether the other central banks will keep on adding gold in their reserve kitty, the answer apparently seems to be yes. Let me give you a data point. For the first time in the history, in total reserve portfolio, gold has overtaken US Treasury. If you see the chart, it is clearly visible that gold in any country's portfolio is close to 24% and US Treasury is 21%. As the dollar de-dollarization theme will continue, gold demand will remain intact. So in a nutshell, we can say that gold demand will continue as central bank across the world are likely to add gold in their reserve because of de-dollarization theme. Second, in the recent past, we have seen that gold prices have corrected, but going forward, even in an uncertain environment, gold is likely to act as an insurance policy or can act as a hedge against inflation rather than a fiat currency which contains counterparty risk or default risk. Now let us discuss technical outlook on gold. Gold prices, which is currently trading near 4700, we are expecting that 4200 to 4300 is going to act as a very strong support for gold, and it is likely to move higher towards 5300 to 5400 in near terms. As far as Indian prices are concerned, we are expecting the gold prices to move towards 1,66,000 per 10 grams. That is the first target. Second target is 1,82,000 per 10 grams. Now let us discuss outlook on silver. If you see the chart, you will be able to understand that demand is constantly higher than the supply. According to Silver Institute, for the 6th year consecutively, silver demand is much higher than its supply because of demand from AI, solar panels, and EV. And we are expecting that as these industries are going to do well in the future, demand will be constant. Second reason why we expect silver to move higher, as US added silver in its critical mineral list. Once it had added in its critical mineral list, it received strategic prioritization and investment mandates. Second, after US, China now have put control on silver export as they are very confident that their domestic industry demand for solar EV is rising at a much faster pace. So basically, China wants to stop exporting or putting some control. As a result, supply globally will be curtailed and demand will constantly be higher. Now, technically, if we speak about level 55 to $65 per ounce is going to act as a very, very strong support for silver, and there are higher chances that silver can move towards $85 per ounce, and second $95 per ounce. In domestically, we are expecting the price to move towards 2,90,000 per kg, and second target is 3,10,000 per kg. In order to control the volatility, RBI took three steps. First, they stopped banks to take net long position of more than 100 million in their books. Second, banks were not allowed to give NDF or non-deliverable forwards to client. Third, in order to curb the speculation, exporters and importers were restricted to cancel and rebook their contract. Once these steps were announced, we were very clear that 95 levels will be protected, and gradually the rupee will move towards 92 and a half kind of levels, as discussed in all our media channels. Now we have almost reached that level. So what is next? Now let us discuss outlook on rupee. Because of the bold step taken by RBI, RBI will be able to control the speculative move, and as the banks are going to unwind their long position in the short term, there are high chances that rupee can move towards 91.5 to 92 kind of levels. But if the war continues, then our trade deficit, current account deficit, and fiscal deficit will continue to increase. As a result, there will be natural pressure on rupee, and after taking a support at lower levels, rupee can move back towards 94 level again. So broadly speaking, the message is very clear. Volatility is going to be there on both the side, and exporter and importer should take business decision or hedge effectively as per their business dynamics. So broadly speaking, to get the customized hedging strategies, you can connect with my team. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.